So today we're going to be see about the 16th question. P Limited and Q Limited agree to amalgamate. So the both the company amalgamate and they're going to start a new company. They are given a balance sheet. So the new company name was a R Limited. So was a formulated take over the both the P and Q company and the purchase price to be a discharge follow. So we have to find out from this only a purchase price. So the shareholder. So purchase we only take a shareholders thing. So share we'll never take a debentures. So the first two option. Shareholder of the P Limited 6,000 at the each of a 10. So we want to multiply. Again for the Q Limited 2,500 into 10. So, and in a debentures holder settle the issue of a 10% of a debentures of the R Limited. So, in the P and Q it was a 8%. When they have started a new company aka R Limited, they have taken as a debenture as a 10 percentage. Here we want to close the both the books. So we want to tally the P Limited as well as the Q Limited, and we want to give the both the companies journal and the R Limited balance sheet. So here assume the amalgamation in a nature of a purchase. So we want to give the journal entries regarding the nature of the purchase. So now we're going to explain the answer. The first step, we want to find out the purchase consideration. So P Limited 6,000 into 10, 60,000. Q Limited 2,500 into 10, 25,000. So 6,000, 60,000 plus 25,000, you will get it as a 85,000. That is a purchase consideration. Next one, payment of a purchase consideration. Total of a purchase consideration minus old share capital, that is a 50,000 and 20,000 given in a textbook. So 70,000. 85,000 minus 70,000, you will get it as a 15,000. From that minus a reserve 8,000 plus 6,000 is a 14,000. 15,000 minus 14,000 1,000 rupees plus 1,000, that is a goodwill. Now, before the balance sheet of R Limited, we want to do a working note regarding the asset. Fixed asset. Here, all the items you want to take from the balance sheet of a P and Q. Both you want to add and you want to mention. Fixed asset 69,500. Current asset 54,500. The goodwill before we have taken as a balancing figure 1,000 rupees. To creditor 7,000, to 8% debentures 23,000. Which amount we have purchased it, that business purchased 60,000 plus 25,000, 85,000. Now we are moving to the balance sheet of the R Limited, that is a new company. First we are taking as a liability side share capital. Now we are found as a business purchase 85,000. Creditor 7,000. 8% debentures 33,000. If you tally, you will get it as a 1,25,000. Similar, we want to get in the asset side also. Now we are moving to the asset side. Fixed asset 69,500. Current asset 54,500. Goodwill of a balancing figure 1,000. If you tally, 1,25,000. Now we are moving to the realization account of the P Limited. Again I will repeat, realization account. In debit side we have to take the asset value. In credit side we will take it as a liability value. If we get debit side as a different, and that is a profit. In case if we are getting in a liability side, that is a loss of the company. This is the concept of the realization account. Now, realization account, asset of the only the P Limited we have to take. Fixed asset 50,000, current asset 41,000. Other than in question we don't have any item. So we are moving to the credit side. 8% of debentures 30,000, creditor 50,000. Purchase business 6,000 into 10, 60,000. Apart from this, nothing else is there. So we're going to take the total. So 3560. If you add 95,000, here we have a differentiate of a 2,000, that is a realization profit. Already I have told you, if debit side, if we getting a differentiate, that is a profit. Now we are moving to the Q limited. Now in debit side, fixed asset 17,500, current asset 13,500. In creditor side, creditor 2,000, 8% debentures 3,000. Purchase consideration 2,500 into 10, 25,000. Now differentiate is getting from the credit side, that is a loss 1,000. If you tally, you will get it as a 31,000, 31,000. Now we are moving to the next equity share account for the P limited. First we have done realization account. Now we are moving to the share capital. Reserve profit we have gotten from the realization account 2,000. Equity share account already given in a question 50,000. Reserve 8,000. Here nothing else is there. So if you tally, you will get the answer of a 60,000. That is a 6,000 into 10. That is a we transfer from the P limited to R limited of the shares. Now similarly we are moving to the Q limited. Share capital 20,000, reserve 6,000. Here Q limited got a loss in a realization. So in this side loss. If we add the both, you will get it as a 26,000. If you minus here, it will be a 25,000. That is a 2,500 into 10. That is a from the Q limited. We are transferring to the R of the share is a R limited shares of a 25,000. Now we are moving to the journal of the P limited. So here we have to showcase it. First asset, liability, payment and equity. If this we are in P limited, we have a profit. Next the payment. So first realization account of the asset. Realization account debtor to fixed asset, current asset 52,000, 41,000. If you add 93,000. Liability, debentures, creditor account debtor to realization 30,000, 5,000. If you add 35,000. Next purchase consideration, R limited account debtor to realization account 6,000 into 10. What purchase we have done it? 60,000, 60,000. Now payment, share account debtor to R limited 60,000, 60,000. Now transferring the shares. So the transferring the shares is a equity share capital account debtor to 50,000. It's given in a textbook question. Profit we have got from the realization account 2,000, reserve 8,000. If we add all the three, we will get it as a 60,000. That is a equity shareholder. Next profit, realization account debtor to equity shareholder 2,000, 2,000. Last one, final payment is a equity share account debtor to share account the 60,000, 60,000. Now we are moving to the Q limited. Previous we done a P limited. Now we are moving to the Q limited. Realization account debtor to fixed asset and current asset. So 17,500 plus 13,500. If you add the both the things, you will get it as a 31,000. Next, realization of the liability, debentures and a creditor account debtor to realization 3,000 plus 2,000. You will get it as a 5,000. Purchase consideration, R limited account debtor to realization account 25,000 and 25,000. How we got it? 2,500 into 10. Next, we are moving to the payment. So, share account debtor to R limited 25,000, 25,000. Transferring the equity, but here we got a loss. If we get a profit, we can write a reserve also. We got a loss, we will never mention the reserve. Equity share account debtor to loss account 1,000, 1,000. Next, reserve of the loss, equity shareholder account debtor to Evaluations 1,000. The final payment equity share account debtor to share account 25,000. From this, we are moving to the R limited, that is in purchased journal entries. So, purchase consideration, business purchase account debtor to 85,000. How we got the 85,000? From the QP limited 60,000, from the Q limited 25,000. Next, asset and liability takeover. Fixed asset, current liability, goodwill balancing figure, creditors, debentures and purchase consideration. Fixed asset 69,500, asset 54,500. The goodwill in the first of the working note we found it out 1,000. Creditor 7,000. Debentures, here in the debentures you want to mention as a 10. Why? Because the question they have given as a 8%, but when for the R limited it is a 10%. 10% debentures is a 33,000 and 2 business purchase 85,000. Next we are moving to the payment. Liquidation account of the P limited is 60,000. Q limited is 25,000. The share capital account will be the 85,000. Again we are going to settle down our debentures to the 8 to the 10% of our debentures account debtor to 33,000 and 10% of our debentures is a 33%.